Arun, so you have an investing philosophy which is dirt. You want to elaborate on that?
So D is dividend, I is interest, R is rent, and T is trading. I also wrote a book on stock markets, which is Yogi On Dalal Street. So in my book, if I can give an anecdote, I talk about three type of gunas: sattvic, rajasic, and tamasic. So maybe I was little bit of rajasic. Used to invest whatever I had. So I had to learn the hard way.
Hello and welcome. This is Neil Borate. I'm deputy editor at Mint, and today I'm joined by a very special guest, Arun Thukral, who is professor of practice finance at Somaiya Institute of Management here in Mumbai. And he's had a long and distinguished career in financial services, which we'll get into further into the discussion. But Arun, first of all, welcome. Very, very glad to have you here.
Thank you, Neil. My pleasure.
So Arun, why don't we start with your career? Can you tell us about your journey?
Okay, so it's a long journey. I'll try to tell you in few lines. So I started with the Unit Trust of India, that is a mutual fund, you all know, and that was sometime in 1989. I worked there for 3-4 years, and that time UTI, they wanted to set up a bank because of the new, that R.N. Malhotra committee report, the new private sector bank was starting, and we were the first one to be set up, the UTI bank, and they invited names, whosoever is interested, be part of the small team. So I opted for that. So there was a small team of 10-15 members, and we went to RBI, did the paperwork and all, and finally in April 94 we got the bank started, and I personally collected the license to open the bank, and I was one of the first employee.
You were employee number one.
Yeah. So that time we were on deputation, so initially given 11 because we were on deputation, and then later on we got absorbed. And so this was the first new private sector bank. It was a startup. This was a 10-15 member team, and now maybe over 1 lakh. So I always tell people that I have also worked in startup. And then started working in areas like treasury initial years. And then at some point of time I was very, very comfortable because treasury, once you do some deals, by afternoon you are free and you are very well respected in the system and you be slightly comfortable. So one of the philosophy I have in life that go out of your comfort zone, because your journey starts at the end of your comfort zone. That's my belief. So I asked for a branch posting. So then I was sent to Noida. I was branch at Noida in 99-2000. Worked there, learned the intricacy of the branch banking, handled all kind of customer, angry customers, happy customers. What a different experience. Then I was brought back to Mumbai because there were some requirement. I worked in different area. I worked in corporate banking. I was a relationship manager in corporate banking. Went to corporate, asked for business, cash management, term loan and all that. And sometime in 2006, the new wealth management department was set up in UTI Bank. At that time it got converted into Axis Bank. The name changed around 2007. And I was again part of the initial team. And then I started dealing with the mutual funds. I learned more about equity markets, more about equity as an asset class. And I also did my CFP, Certified Financial Planner course. That got me interested in this field. And I had anyway very keen interest in stock markets and all. And after that, around 2010, there was an opportunity to be part of Access Direct, because Access Direct was being set up in 2011. And again, that was a great opportunity for me because I always wanted to be part of markets. And having my experience all over, I obviously got selected because I had all-round experience of branch banking, corporate banking, customer service and all that. And I went there as a joint MD. There was another person with me, and we set up this new portal, Access Direct. And 2014, my other joint MD, my colleague, he went back to bank and I became MD in 2014. And that time was great time for us because we were all growing and we were opening many accounts, and obviously our other competitors that time were the other bank sponsored brokers like HDFC Security, ICICI Security, and even Zerodha was gaining traction So great times, opened lot of account, got few awards for the company, got few awards for myself. And 2020, I decided to leave the bank. I thought of setting up something on my own, and COVID happened. So when COVID happened, I was sitting at home because I can't go out, I can't set up my venture, I can't find people. So 2-3 years prior, I used to go to some campuses to address students as a guest speaker and all, and I was enjoying that experience. So I had a lot of friends in different B schools. So one of my friend from IMT Nagpur, he was talking to me and he said, "Why don't you take an online class?" And I said, "Okay, I'm anyway sitting at home." So I started teaching students about commercial banking, and then invited by some other B schools. And then I started enjoying that part. One thing I forgot to tell you before I left, I also wrote a book on stock markets, which is Yogi on Dalal Street, which is about investor behavior. So I had written a book. I have been there at the helm, and I was now enjoying this mentoring student, giving back to society. So when the COVID almost finished last year, 2022, we were almost out of COVID. So my wife was checking up with me whether still I am interested in setting up my venture. I said no, because I started liking this experience where you have lot of time, you are giving something back to society, and you have time to follow other interests. And one of my interests is follow markets and invest my own money. So I think that way I am in a good space. I teach subjects like behavior finance, financial market, treasury, commercial banking. So these are some of the subjects which I like.
Arun, can you take us through a day in your life at present and how it was when you were in the corporate job?
Oh, great question, Nick. Great question. So it's totally changed now. So if I look at my earlier years, and one of those days, I would get up early at around 4 o'clock, rush to the airport, go to some city. So I used to travel all Delhi, Calcutta, Bangalore, Hyderabad, go and meet someone, some customers, some high net worth customers, and then maybe address my team in the afternoon lunch. Then take a flight, let's say go to Bangalore, again do a meeting with my own staff, visit some branch, meet some client, and come back. And if you're going to Bangalore, you'll go to Hyderabad also. So 3 days you'll just tired, and in your sleep also you'll hear noise of airplane and dream of airplane. And now it's great. I would get up the time I want. If I have a class, obviously I have to be on time. If it's a 9:30 class, I have to come here. But if on the particular day there is no class, so there will be class in 2 days a week, and I come here for around 4 days a week. I'll come here, take my class for 2 hours, meet some students, talk to my fellow professors, watch little bit of market, make some calls, go to the mess, have some food, go back around 5, reach home, have cup of tea with my wife, and maybe little bit of walking, little bit of gym, and then watch some Netflix and enjoy. And so that has totally changed. So I have one daughter who is settled abroad. Right now she is in New York, and so no liabilities as such. And then take holidays. So next week I'm going to Sikkim, and then maybe next December I'm going to Europe. So that is what I understand. Being wealthy is having lot of time. So money is okay. So but that someone said that you should make this statement when you have enough money to take care of this. Right. So fortunately I have, but yeah, I have also decided that this is enough, because sometimes there is no end of this. So I think that is where I am.
Arun, now let's talk about your investing journey. Right from the initial days when I think you got burned with the Ketan Parekh stocks to how you evolved as a dividend investor.
Great question, Neil. So I started investing sometime in 94, 95 when we set up the bank, and I was getting some money. I was able to save some money.
At age 35.
Around 35 was my age, and I was obviously that time there was a tech boom, and I didn't have much knowledge, but I was very excited. being a young guy at 35, not at 25. But so I invested in all those stocks which you said. So I had DSQs and Crest Communication and Global Tellies and some good stock. Satyam was not a bad stock, but I had. And some good stock, like that time there was a stock called Digital. That was a good stock. And I bought little bit of Telco and Tisco, those Tata companies and all. But 90% my portfolio was this dud stocks. So my portfolio went from 10 to 100 and came back from 100 to 10 or 5. So I think that was a huge learning sometime in early 2000 when this tech crash happened. So after that, I learnt my lessons. After that,
So that time, were you plowing your entire salary into?
Whatever I could save, I was putting everything. 2001, another interesting thing happened that Axis Bank started giving ESOPs because it was a new bank and the first time a new bank started giving ESOPs. So we used to get a lot of whatever Axis stocks, and I used to sell whenever it used to vest in me, and I used to sell that and then buy some good stocks or some mutual fund. And I wrote that 2003 to 2007 boom. And then I really made good money as per my standards. So I was very happy with my strategy. And I also did one thing. I started liking dividend stocks because like there is still that stock is available, was Tata Motor DVR. Because the attraction was that DVR would give you some more dividend and you don't have a voting right. Obviously, I was not interested in voting rights.
Than the regular Tata Motor stock.
Then the regular Tata Motor stock. And I used to buy all software company stock, now the better ones. I bought NIT Technology, which is now Coforge. I bought HCL Tech that time. Over a period of time, I started buying ITC. So I think these are some of the dividend stories I have. And now, if you look at HCL Tech, I think it has not missed a dividend even in one quarter for the last 60, 70, 80 quarters, if I am right. And they're increasing the dividend every year, other year and all that. So I think these are great stories because I wanted to be in cash so that if there any opportunity comes, so I can get that money along with my. So I started building that passive income stream. I was following that strategy or that philosophy.
So essentially, the dividends would pay you cash regularly,
Yeah.
and you would deploy that cash if there was a market correction.
Correct. Because so one of the things happened is I used to earlier, whenever there was a small crash, the first crash when the market fell by let's say 3%, 5%, I used to invest whatever I had. But then there is no cash. So that is my weakness. So once you know your weakness, that you then you should have a strategy of generating cash at regular interval. So in my book, if I can give an anecdote, I talk about 3 type of gunas: Satvik, Rajsik and Tamsik. So Tamsik is the person who invests in all penny stocks and anything and chit fund scheme and all that. And Satvik is like you buy good companies. And Rajsik is that whenever there is something in the market, you want to jump in. So maybe I was little bit of Rajsik, used to invest whatever I had. So I had to learn the hard way. And the Satvik part developed over a period of time. So I started buying all good companies. I started following all big names. So if Rakesh Junjunwala is buying Titan, so I thought Titan is a good stock and it has rewarded well. I still hold that. I bought Pidilite because everybody used to enjoy the Fevicol ad. I used to wonder that I have changed many houses during the course of my career. Wherever I used to go and see Fevicol only. So I realized that, okay, you enjoy the ad, but you buy the company also. Asian Paints, Divi's Lab. Some of this I sold, some of this I still hold. These are some of the stock.
Some of these are not dividend stocks though, right? I mean,
yeah, some of these are not. So Titan is not a dividend stock, but it has rewarded handsomely. So Asian Paint is not a great dividend stock. Pidilite is not a great dividend stock. But yeah, HCL Tech, ITC, Bajaj Auto, Coforge, which is again giving every quarter some good dividend. So it's a mix of that. But I learned the hard way because 2000 crash, I had all dud names. Now I wanted better names. And I was started looking at the business model. Like Titan is a great trust. And over the years, we have seen that. And obviously there were some mistakes and you bought some companies which you could not handle. And like recently, last year, there was a craze for new age businesses. Then somewhere that spirit again to get into these stocks and make some money, like Paytms and Zomatos. And initial issues I invested, but I could sell it. So now another thing which I have learned over a period of time, book your losses early. Earlier I used to wait. So there was a bank called Lakshmi Vilas Bank, and I bought a good quantity and I had to sell at a huge loss. But like this 3 stocks I bought, but I sold early, booked good loss. And but recently then I started looking at it again. So earlier the thing is that if you have burnt your this thing, don't go near that. But again, my yoga book I have talked about is Dvesha, that you should not hate. Like somebody lost money in market, we should not say that market is gambling and market is bad. You have to look at a fresh perspective. So I looked at Zomato, when it became 40-50 rupees and all those Ashwath Davodaran's price has come, and then I said, who can replicate Zomato? Maybe Swiggy, maybe it is a duopoly. So again I took a bet, and this time so far it has paid. It is already 2-3 times. So these are some of the things which I learned over a period of time, that I looked at that stock again. I booked a loss, but now I have more than that, I have covered that.
Arun, so you have an investing philosophy which is dirt. Do you want to elaborate on that?
Yeah. So in my around my 40 years, when I was 35 to 40 years, I used to think that I should have something that at regular interval I should keep getting money. That passive income formula. One is my salary income, which would stop at one day. So I thought about developing this particular formula for myself, which I then used to tell to my friends, and now they all know me that he is that dirt guy. So I said, पैसा हाथ का मैल है, but उसके लिए मेहनत करनी पड़ेगी. So D is dividend, I is interest, R is rent, and T is trading. Trading per se is not day-to-day trading, but maybe take a position after when it becomes expensive, sell part of that, cover it back. So I think that has paid me. So I have one house where I live. I have another house where I get a rent. So I get dividend, good amount of dividend. I get rent. I do some trading, in the sense I buy and keep it, and when it becomes expensive, I sell part of that. And interest. Now the interest part also has a story. Earlier I used to put money in FDs only, but once this InvITs arrived, and it started during COVID time. The first InvIT I bought was IRB InvIT. The logic was very simple, because there was no highway, there was no toll collection. The stock was anyway below face value, that is okay, but it fell to around 30-40 rupees. So I started buying at around 50 rupees, and it gives you around 8 rupees dividend, which is 12-13% yield. So I bought good quantity there. And then I bought India Grid, which is again doing very well. Then I also bought Power Grid, which is right now not doing that great, but still I think giving 10%, 11% yield. So I shifted my debt portfolio to these 3 InvITs. So little bit of InvIT and stocks, and another area which I am venturing now is ETF. What I have realized now, that I am paying a lot of tax because of my dividend income, because of my InvIT income, and I need a certain amount of cash for my sustainability for the year. So if I take out that amount, and I am also teaching here and I am doing some assignments, so I am generating enough cash.
So basically the cash you get from dividends and interest is much more than what you actually need.
Yeah. It's much more. So the strategy now is to shift to ETFs. So that is more tax efficient. You pay long term, because I will not sell every day. I have already started building. So I have bought 4 ETFs, which is, I'm basically covering the market in the way that Nifty B's top 50 stock, then next Nifty, then mid cap 150, and then 250 small ETF. So all 4 segment I have covered. And now I am shifting my portfolio to these 4 ETFs over a period of time. Still I am far away. I have already shifted 10% of my portfolio, but every year, because you have to book profits, because these are all long-term profits. And sometimes you feel like selling your jewels. Let's say selling. So this year I sold my Asian Paint, which is a good stock, but it's not paying me dividend. So first off the block, I'll cut that. And maybe I'll still keep my HCL Tech and all. Slowly I will sell part of that. But over a period of time, I will only generate that much cash, maybe a little bit more, to use, and remaining I would shift to ETF. That's what I am doing.
Right. So Arun, as we discussed earlier, you have an 80-20 split between financial and real estate.
Correct.
And within financial, you have 90% in stocks or ETFs
Stocks and ETF 90%.
and 10% in FDs
FDs and InvIT.
and InvIT.
Yeah. So that is sort of my debt portfolio. InvIT is traded, but I treat it as my debt. Yeah, however, sometimes it is quite volatile. But net I am getting 13% return, 12 to 13% on my InvIT portfolio, which is great. And FDs I am also using for another purpose. One is obviously I should have some FD, and I have taken a OD line against FD, which overdraft line. So if the market crashes, so recently it has crashed 4-5%. Suppose it goes down by another 5%, 10%, then I would need cash. Instead of keeping so much amount in savings account, I would use that line, and maybe once the market recovers, I would repay. So that is the strategy, because you should have enough money when the market falls, which earlier I missed in my earlier days. Whenever market fell, I could not utilize to that extent possible. That's what I do.
Right. So instead of breaking your FD, you would borrow against the overdraft.
Yeah. I don't have to borrow. I just issue the check. I just transfer. Nowadays, it's mobile banking. I just press of a button, the money comes and sit here. Earlier days, it was difficult. You will issue, you will transfer. But now, technology, you know that.
So, right. So within DIRT, if we talk about the trading for a bit, you have a special situations approach.
Correct.
Could you elaborate on that?
Yeah. So yes, special situation approach, I discussed about the Tata Motor DVR, because you get higher dividend, you have no voting right, but for one Tata Motor you get almost 2 at that time. Now it is almost 60-70% of the value. So I used to, so whenever there is a buyback, I give my entire portfolio for that stock, and whatever gets accepted, I can give it back to them, and there is no tax. As you know, buyback, there is no tax for the investor. So you are selling and booking no capital gain. And you can buy back from the market. Like recently, L&T took my shares at 3,200 rupees. And then it was available at 2,850 recently. Now again it has come to 3,000. So these are some of those opportunities which keep coming. Earlier, bonus, all these companies were giving bonuses. So maybe you will sell your initial thing and book some loss, and against your tax liability you would adjust. So these kind of, like HDFC and HDFC Limited, there was a good arbitrage available. So I kept doing that, and when it got merged, I sold part of that at good price. Now obviously the HDFC has come down. I could not sell the entire thing, so I am still holding. IDFC Limited again is a good opportunity. So these kind of opportunity will keep coming, which is slightly low risk strategy, but I should say that stock market is risky. But maybe now I am at a stage where I can handle that risk. Another thing which I forgot to tell you is my SLBM entry.
Securities lending
and borrowing, and that's a beautiful facility or opportunity. And I wish that there are more opportunities, because every day there are very few stocks which you can give. So recent time, some of the stocks like IDFC First and all, there is always a good demand.
Sorry, Arun, if you can just explain to our viewers. So SLB is basically, you can lend if you have a stock portfolio and somebody wants to say short the stock. So to short the stock, they have to borrow it first. You become the lender to that borrower.
So for a portfolio investor like me, who is anyway going to keep these stocks, I have a view on these stocks. I have not sold. So I am holding Coforge for many years, and Bajaj Auto and IDFC in the recent years. So these are my stocks, and I have a good view about this stock. So I am not going to sell. So now here is someone who needs that stock for short term and giving me some money for that. So it's a plain income. For me, it's a zero risk. So people ask me, is it not risky? But I think my counterpart is.
So Arun, within your DIRT philosophy, the T is trading, and for
D is dividend.
No, T
is trading. Yeah, sorry. T is trading.
And within trading, you follow special situations as a strategy. So could you elaborate on that?
Yeah. So special situation, as I mentioned earlier, about one was this Tata Motor. So you are getting extra dividend but no voting right. So if you originally hold Tata Motor, you can always sell, or if you intend to buy, you buy straight away DVR, because you don't want voting rights and you get higher dividend. So this what I bought heavily at earlier 2004-5 times, and then that time it was paying dividend. Then it stopped paying dividend. I got out of it, and recently again they became profitable, and again I bought. And there was a bit of luck that recently they announced the merger with the Tata Motor, and you get around 70% of the value, and it was quoting at a discount of 50. So I got 14-15% jump in a day. That was luck. So in a bit of luck also always helps. And the buyback, whenever any buyback comes, I give my entire portfolio for that share. Whatever gets accepted, the benefit is there is no tax. And normally the buyback rate is higher. So even if you wish to buy, you can go buy some more share of the same stock. Or maybe if you want to come out partly, you can do that. Yeah.
So just to explain this to our viewers, essentially, if you have 100 shares of company A and you tender all 100 in a buyback, and let's say they take 10, you can go out in the market and again buy those.
Yeah. So recently L&T took share back at 3,200. And after a week, it was available at 2,850 or 2,900. I can easily buy back. And I can buy back more. In your example, instead of 10, you will get 2 more share. So this is, many people would be lazy, would miss it and not do it. But I'm very particular about these things. And earlier there were bonus issues. So you can sell your original share, book some loss, whatever is legally allowed. Yeah.
How difficult is it to do this process, the tendering for buyback? Is it all electronic?
It is on the press of a button. So I have an Access Direct account and I just go there. I go to that buyback menu. I just press the button, accept my share. That's all. 30 seconds. So now I think that is another thing. The technology has made our life much, much easier. Earlier that was a difficult process. You have to call the broker, then he would tell you, then some other dealer would put the order. So now it has become very easy. So I think people should use it more often. The technology you should learn. Yeah. So buyback, this kind of dividend stories, and like HDFC Bank merger. So it was available. If you buy HDFC, you were getting HDFC Bank at a much lower price, some 40-50 rupees. So I kept doing that, and the day it got merged, I came out of this additional portfolio. And I was booking some profit. Now, right now, if you say IDFC and IDFC Limited would merge, because anyway I am holding that. So instead of adding more to IDFC first, I am adding now IDFC Limited, because again you are getting 10-12% cheaper. Whenever it merges, it merges. So these are some of the things which I keep doing, which is not rocket science, which is available. But sometime you will become lazy. Sometime you will say, "Nahi, abhi to record date nahi aaya hai," but it would come. Or maybe there is a little bit of risk which is anywhere inherent in equity market, which I am ready to take.
So what kind of risks are inherent in special situations investing? Because if you put on your professor's cap, the efficient market hypothesis says that there should not be arbitrages lying around for you to grab, but they actually do, and you manage to capitalize.
So I am more of a Warren Buffett fan. He says there is no such efficient market hypothesis. If that there is such thing, I would have been on the road with a bin. So my view is that these are some of the examples. This is available. Efficient market hypothesis over a period of time. Sometime it becomes, but most of the time there are so many opportunities available, and you can just go and utilize. But you are being lazy. You don't think rationally. So the risk is that obviously there is a merger announced and it doesn't happen. So the first thing is, the basic premise is that you have to go for a good company. You can't go for a company which is below your radar, which is not as per you. So let's say HDFC and HDFC Limited. I know the company, you know the company, even IDFC now, the way they are doing well. So I will not get into a company which is not that efficient as per my standard. I will do it with good companies. And sometimes because of some reason, yes, there may be a risk. I am ready to take that risk, because over a period of time I have lost money also. But I have made money more than that.
Right.
So over a 30
net you've made money.
Yeah. Net I have made money. I think that is what the portfolio level you should always look at. You can't say script by script. So that's it.
Sure.
And yeah, in one thing to add, in IRB also people said that it is quoting below face value. It's always quoting for the last many years. But I entered at 40. I entered because there was COVID and there was no toll.
IRB InvIT.
But now it's doing well. It is steady at around 70. On my investment, it is giving me 13% yield. Although still it is below face value. So that's a risk.
So Arun, you also do securities lending and borrowing, SLB, where people are able to borrow stocks usually for shorting, and you become the lender, so you're paid some interest by the borrower, and that can be quite a tidy sum.
Yeah.
So how do you go about it, and how much does it give you?
So Neil, this is a great opportunity, and I have started recently because I realized that there are few stocks I hold which come in that particular list, and for me there is no risk. So initially I was thinking whether there is a risk, but my counterparty is exchange. I am only lending my share to someone who need that for that particular period, and he's paying me premium, he's paying me money. So that's a free income. Yeah, but it's a business income, so I have to pay some whatever my slab. It's not your capital gain, but it's okay. It's like your dividend income. So let's say last 1 month there is a good opportunity in IDFC First. So IDFC First is not paying me dividend, but IDFC First is paying me this SLBM income. So I am happy with that stock. So every stock has to do something.
So as a percentage, what kind of return do you make in SLB?
So it's recently started. It's percentage terms. It's annually it is some 7-8%, 9%. It depends. Sometimes it goes up very high depending on the supply and demand. So there is no track record as such because I have started recently, last 2-3 months. Maybe after a year, if you ask me, I can tell you. And it is only a specific stock. So if I have 10 stock or 15 stocks, it's only on 2 or 3 stocks I am able to do. Let's say I have done in Coforge, there was some opportunity, Bajaj Auto some time back, but not every stock. The bigger stock will have lot of supply. So the opportunity will be not that big. It will be tiny opportunity. So maybe I will not take it if it's too little. But yeah, if there are more shares, there are more securities, there are more people participate, I think it's a great opportunity because you need speculators, you need people to provide the depth to the market. I am an investor, but this is an opportunity for me to earn some interest income. So it's a good thing. For every stakeholder, there is something. Speculator would make his own money or lose his own money. I am only going to make money and pay the tax.
Arun, before we finish, any thing you'd like to add for our viewers?
So my philosophy in life is that first is that always go out of your comfort zone, whatever you are doing, and keep learning, whether it is my career, whether it is my investment strategy, like trying new things. Like SLBM is a new thing, but I wanted to try. And second is that at some point of time, you have to be thinking that, so my philosophy is that being rich is having money and being wealthy is having time. So I think that is where I am, and try to be with good stocks if you want to invest in stocks or the strategy, and follow specific strategy. You can't change your strategy every day. Over a period of time, like I am now decided that I am shifting to ETFs. So that is the next 2-3 years. So I am following that, and enjoy your life. I have never lost sleep over stock market crash. I have never lost sleep.
Great. Thank you so much, Arun. It was lovely
Thank you.
speaking to you.
Great. Thank you, Neil. Thank you for having me.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.